Hello everyone, Steve Ribble with Shrink My Taxes here, bringing you another quick tax topic video. A lot of people are afraid of IRS audits. Some people are so afraid, in fact, that they won't take a legitimate deduction on their tax return because they don't want to raise any red flags. One of the top 10 red flags is the home office deduction. So today I thought we'd spend some time to walk you through what you need to know in order to take this deduction the right way. Let's begin by finding out what you're up against. What are the chances of you facing an IRS audit? Well, the most recent data, you look at last year, overall about 1.1% of all tax returns ended up getting audited. That comes out to about 1 out of every 90 tax returns. If your income increases, your chances of getting audited also increase. About 12.5% of taxpayers with incomes over $1 million ended up getting audited. 4% of taxpayers with incomes between $200,000 and $1 million ended up receiving an IRS audit, while just over 1% of taxpayers with incomes under $200,000 ended up getting an IRS audit. Business returns actually are even less. Under 1%, 0.63% of all business returns got an IRS audit for tax year 2010. What happens if you lose an audit? If the IRS disallows a deduction, you're going to get hit with not only the taxes due, but you also get hit with penalties and interest, and that's not fun. So let's look at the home office deduction and how you can do this the right way. This data is going to come out of IRS publication 587 if you want to look that up on Google. To be able to take the home office deduction, your use of the business part of your home must qualify out of two things. Number one, it has to be exclusive, regular, and for your trade or business. So it has to meet those requirements. It has to be exclusive for your business, regularly used, and it has to be for your trade or business. The second requirement is the business part of your home must be one of the following. It should be either your principal place of business, or it has to be a place where you meet or deal with patients, clients, or customers in the normal course of your trade or business. One of the confusing parts of this is exclusive use. So exclusive, what does that mean? Exclusive means that a specific area of the home is used only for trade or business. It can't also be used for the family to watch TV or a spare bedroom or something like that. It has to be used exclusively for your trade or business. So keep that in mind. Now, there's two ways to calculate the home office deduction, and this might be new to a lot of people out there. You've got the square footage method, which a lot of people are familiar with, but you've also got the room method, which is less known out there. And the important thing here is you can use either method. So let's look at the square footage method. In essence, what you're going to do is take the square footage of your office and divide that by the square footage of your home. You are allowed to subtract square footage of common areas in your home, such as hallways, entries, stairwells, landings, and garages. Looking at an example, if you had a 200 square foot office and you had a 1,600 square foot home, your deduction comes out to 12.5% of your expenses as you're able to deduct. The room method, a little bit different. You're looking at the number of rooms used for business divided by the number of rooms in your house. The important thing here is that you can exclude bathrooms, closets, garages. So for example, and let's say you've got one room used in a 5-room house, excluding bathrooms, closets, and garages, your deduction comes out to 20%. You can use either method, as I said before, and we always encourage our clients to look at both methods and obviously take the one that's going to benefit them and give them the greatest deduction. Where do you report your home office expense? If you're a sole proprietor and you file a Schedule C, it goes on Form 8829. If you're an LLC, a partnership, you're going to attach a Schedule E and Part 2 to your 1040. If you're an S-Corp owners, you're not able to take it as a direct business expense, so it's going to go on a Schedule A of your personal 1040 as an unreimbursed employee expense. Now, business owners, LLCs, partnerships, S Corps, what we always encourage our clients to do is to reimburse themselves directly through what's called an accountable plan. And this is a corporate document that you set up with your LLC or partnership or S Corp that enables you to take a business tax deduction for the monthly use of your home office, and there's no income tax consequence to you on a personal level. So your business gets the tax break, and you don't have an income tax consequence on a personal level. So let's look at the two types of expenses that you're able to take with your home office deduction. You've got direct expenses, you've got indirect expenses. Direct expenses are exclusively for the home office, and these you can take 100%. Some examples of direct expenses might be if you decide to paint your home office. 100% of that cost you're able to deduct directly. If you put new carpet or new flooring in your home office, that is 100% deduction. Or if you remodel a bathroom that is in your home office, again, a 100% deduction. So anything that is exclusive for your home office, you're able to deduct 100% of those expenses. The indirect expenses are going to be expenses that benefit the entire home, and we'll get some examples here. But this is where the percent, if you remember we talked about the room method or the square footage method, this is where you deduct that percent off of those expenses. Here you're looking at mortgage interest and property taxes if you own the home, depreciation if you own the home, rent, so a percentage of the rent if you actually rent an apartment or you're renting a home, utilities, insurance, a security system, home maintenance, condo association fees, pest control, snow removal, etc. Also cable TV and internet access, you're able to take a percentage of those expenses. One important thing is you cannot deduct lawn care. So don't include lawn care, pool service, those types of things you're unable to deduct off your home office expense. Couple tax reminders. Definitely keep good records. We encourage all of our clients to take a digital photo of your home office space just in case you get audited. You want to be able to prove that exclusive use part that we talked about earlier. Keep all receipts of all the expenses, shared or direct, for your home office expense. If they come and you get audited on this, they're going to be looking for those receipts. You got to be able to prove that expense. If your business shows a loss, you cannot take the home office deduction. It doesn't mean you don't file the 8829 if you're a Schedule C sole proprietor, because that actually gets carried forward until you do show a profit, but it means it's not going to help you in the current tax year. If you use an accountable plan, this isn't the case. So if you're an S Corp, an LLC, or a partnership, you should set up an accountable plan and expense your home office that way, because even if you have a loss, you're going to still be able to deduct that home office expense. If you're a trader in securities and you're a sole proprietor trader who's profitable, all of your expenses go on Schedule C's, and your profits through trading are going to go on your Schedule D. So how are you going to be able to take this loss? Well, there's ways that you're able to do this, and we would encourage you to reach out to us here at Shrink My Taxes, and we can help walk you through that. So if you'd like more information about the home office deduction, or if you've got further questions regarding the home office deduction or accountable plans that we talked about, please contact us at info@shrinkmytaxes.com. info@shrinkmytaxes.com. So how can Shrink My Taxes help you? Well, Shrink My Taxes is a full-service accounting firm dedicated to providing proactive tax strategies. We go beyond just putting the right numbers in the right boxes, and we formulate a plan to help you shrink your taxes. Some of the services we provide: we do income tax reviews. If you're not sure if you were able to take deductions, or if you've got some deductions you didn't take, well, we're able to go back and review for free the last 3 years worth of income tax returns, and making sure they were filed properly and that you got every deduction that you were entitled to. Income tax preparation for individuals and small businesses, and tax planning. That's what I talked about prior, is that we go through your prior tax returns, look through those in detail, and come up with strategies to help you shrink your tax bill. We offer payroll tax services, entity consultation and formation, and unlimited consultations. This is a very important part here of what we do at Shrink My Taxes. As you're a client of ours, anytime you have a tax question or a concern, you can reach out to us through email, through phone, and we are available for consultations as often as you need them. And we don't bill extra for that. So you can reach out to us and not be afraid of getting a bill in the mail from us, because it's all included in our flat rate pricing. I appreciate your time today. Hopefully you learned some stuff. Here's our contact information if you need to reach us by phone or fax. The email address was info@shrinkmytaxes.com, and our web address, shrinkmytaxes.com. You can also follow us on Twitter @shrinkmytaxes. Thanks again, and we'll talk to you soon.